semiconductors, technology. Don't need to tell you that. It's down 1.6, given that on the NASDAQ composite is down over 8% right now. Communication services down 1.4. We do see, like you said, energy in the lead up by 2.1%. Hey, the shift in narrative right now that we're seeing, we're kind of going from a Fed-driven market, or at least dovish Fed talk earlier this week from some prominent members, some non-voting, we should note, to a focus on earnings. Now that we have the big banks kicking off earnings season, we got a slew of earnings coming next week that are really going to shine a light on what these companies are thinking about the health of the U.S. consumer and the global consumer as well. I mean, we got Charles Schwab on Monday, we got Morgan Stanley Wednesday, we got Bank of America on Tuesday, we got Lockheed Martin, United Airlines, J&J, we got Tesla next week as well, so Netflix as well, some big ones.
Well, listen, the financials alone give us some insight into kind of the lending environment. The health of, those credit card numbers, where you heard from JP Morgan maybe having to take down some of the reserves.
That was surprising to me.
Because it wasn't as bad maybe.
That's surprising.
Why?
Because everyone was saying, okay, well, excess savings are drying up. Americans have more on their credit card now than ever before. So there are concerns about the health of the consumer, and they're saying, oh, wait a second, we're actually more optimistic in terms of people defaulting than we were.
Well, and I'm thinking about some of the balance sheet data that has come from the government, right? And we had all those economists maybe rethinking maybe the household balance sheets aren't so bad. And talking with Sonali Basak and Anton just making the point that when it comes to JP Morgan, their credit card portfolio tends to be at the higher income level. So it's something to remember. It'll be interesting what Bank of America says. He made a really good point. Brian Moynihan has a great, whether it's mortgages, whether it's credit card lending, that's maybe
debit card activity at Bank of America. I mean, they have such a good real-time view of what people are spending their money on, how much they're spending, and how it's changed over a certain period of time.
I want to point out, too, we did get some data today on consumer sentiment, the University of Michigan sentiment. That number came in below expectations. Consumers, also year-ahead inflation expectations, rose sharply in early October, so driving a steep deterioration in America's views of their finances as well as sentiment. So all of this is playing into, if Americans are starting to feel like, wait a minute, my financial picture, not so good, not so healthy. If I'm worried about continued inflation pressures, if you're worried, you start to slow down. You just do, because you're like, maybe I need to hold on and just, wait to see how all this plays out. And maybe, you're hunkering down, if you will, for things getting worse.
Yeah, that number coming in is 63, whereas analysts estimated it to come in at 67. We got some data coming next week, Carol, that we can look forward to. We got retail sales next week. We also have building permits and housing starts as well, and then of course initial jobless claims next week to give us a good idea of what's going on in not just here in New York, or not here in New York, but I'm thinking about Empire State stuff over in New York, and also what's going on in the country.
Tim made this great observation. We're walking from the hotel, which luckily enough it's right next door, so it's easy walk, but he's like, there's nobody on the street, nobody's walking.
Such a beautiful day.
It's gorgeous, but it's such a different
vibe.
People are in cars, a lot of cars out here.
I did take a Polestar yesterday for the first time.
You did?
Yeah, I ordered a Lyft. It was a Polestar.
And?
It was great. The majority of Lyfts and Ubers I've taken have been EVs, which is totally different than New York, where everything's like a Toyota.
Are you requesting a green, or just what's coming out?
Just coming, yeah. So I've taken 2 Teslas and 1 Polestar.
Never been?
No, not yet. Still never been in Rivian.
No. Maybe soon.
Maybe. That's too expensive for ride sharing, I think.
All right, everybody. Listen, apologies that we couldn't get back to Walter Todd, but we will bring him to you real soon in the near future. You're listening and watching Bloomberg Business Week on this Friday the 13th. We're just about 10 minutes away from the close of trading, and this is Bloomberg.
Now, your 3-day weather forecast on Bloomberg 960.
It'll be partly and mostly sunny as you go through this afternoon. Temperatures mainly sitting in the 70s. Tonight, mostly cloudy skies with a few showers and in the 50s. For Saturday, morning showers then breaking clouds, again, mostly in the 70s. Then for Sunday, morning clouds, afternoon sun, 70 to 75 for the day. Near 85, though, well, inland. This is meteorologist Gary Best, here with your 3-day weather forecast on Bloomberg 960.
Breaking news first. War in the Middle East.
Israel continues to strike key targets in Gaza.
The Gaza Strip's main medical facility is now overwhelmed.
Is this contained to Gaza, or is this going to start to spread?
Iran says that there could be a new front in this war for Israel. None of us have a crystal ball, but the risk is significant.
It's not clear that the situation on the ground is going to get any better anytime soon.
For the latest headlines on the Israel-Hamas war. Stay with Bloomberg 960. Context changes everything.
When Wall Street is waking up, Europe is already trading.
Bloomberg Brief brings you the news, data, and analysis you need to set your agenda. Micro, macro, and everything in between.
This is Manascrani in New York.
And I'm Danny Berger in London. Join us as we follow the money around the globe.
We'll take a daily deep dive into risk and help you make informed decisions for your business.
Watch Bloomberg Brief weekdays at 5 a.m. Eastern only on Bloomberg Television.
Context changes everything.
Citrin Cooperman presents Tax Chat with Anthony Rodriguez, partner at Citrin Cooperman.
If you or your company had interest in foreign corporations in either 2017 or 2018, here's something you should know. The Supreme Court plans to review the constitutionality of Section 965, also known as a transition tax. The transition tax required U.S. shareholders to pay tax on untaxed foreign earnings of certain foreign corporations as if those earnings had been repatriated to the United States. If you are subject to the transition tax and have questions on what this case could potentially mean to you, let Citrin Cooperman help you focus on what counts.
For more tax chat from Citrin Cooperman, visit citrincooperman.com. That's CITRIN Cooperman.com. They focus on what counts by providing critical industry insights and professional services to clients for over 40 years. Are you a wirehouse advisor that's looking to break away? Commonwealth Financial Network can help you take control of your career and build your business on your terms. Your clients, your strategy, your time. Unleash your entrepreneurial spirit and choose the growth path that's right for you. Own your future with Commonwealth. To learn more, visit commonwealth.com. Commonwealth Financial Network, member FINRA SIPC, a registered investment advisor.
Can't catch us live? Your favorite Bloomberg 960 shows, including Bloomberg Surveillance, Wall Street Week, and Bloomberg Sound On, are also available as podcasts. Listen today on Apple, Spotify, and anywhere else you get your podcasts. Now, your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Microsoft's $69 billion acquisition of Activision Blizzard has been approved by the UK competition watchdog, removing the final major global regulatory hurdle. With more on the story, here's Bloomberg's Tom Busby.
Charlie, the biggest ever acquisition in the video game industry gives the maker of Xbox consoles a more formidable position against rivals, vaulting it from 5th to 3rd place globally behind Tencent Holdings and Sony Group. Now, this acquisition is a stunning turnaround after Microsoft executives underestimated the magnitude and longevity of antitrust objections, forcing the software giant to seek a 3-month extension of the deal's expiration period from Activision. Microsoft was able to close after making alterations to its merger agreement to win over UK authorities. The U.S. Federal Trade Commission, which lost an attempt to block the transaction in court, continues to pursue legal action in its own administrative hearing. Charlie?
And as Tom Busby reporting, Microsoft shares down now by 0.9%. Activision Blizzard lower by 0.1%. 6 minutes to go ahead of the close. BlackRock clients hold a net $13 billion from long-term investment funds, the first outflows since the onset of the pandemic in 2020. Assets under management are at $9.1 trillion. Estimates were for $9.23 trillion. Shares of BlackRock down now by 1.6%. And those are some of the top company stories that we are following for you at this hour. I'm Charlie Pellet, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
right, everybody, you are listening and watching Bloomberg Business Week. Carol Master, along with Tim Stanovic, we're live at the Los Angeles Bureau here at Bloomberg News, enjoying our time out here on the West Coast. Meantime, a lot of focus on the East Coast because of those big banks. We talked about it earlier, but one story we wanted to kind of just dig a little bit deeper into, and that has to do with some of the cuts. Citi, Janelle Bostic, as you said, people are kind of trying to figure out how to describe what's going on, the changes. I use the word restructuring.
What did she always call it?
I call it restructuring.
Yeah.
What did she say?
I forget what she called it.
She was like, well, that's kind of okay. Like, that's acceptable. But people,
I mean, it counts, thousands of people.
Well, Citi trimming headcount by another 2,000 jobs in the third quarter, so their firm's total severance charges for the year, $650 million. That got into some of the issues that were of concern with the big banks, and that was some of the cost issues, if you will.
Yeah, let's add some more context here, because the company's cut about 7,000 positions just so far this year, and that's according to CFO Mark Mason. We said that earlier on the conference call with analysts when they talked about earnings. It compares with the $450 million in charges that the bank has recorded at the end of June, which Mason said at the time covered about 5,000 dismissals.
Here's an interesting, though, aspect of this story. Despite the cuts firm-wide, headcount at Citi has actually remained flat for the past 4 quarters at 240,000 employees. The bank has added tech staffers and other employees to help with its efforts to resolve a pair of consent orders the firm received from regulators. So
that's really
ebb and flow, right?
Yeah, and you know, I think it's important to bring up the fact that we spent so much time in the early part of this year talking about tech layoffs and what happened with tech companies, and that these people who got laid off from some of the big tech firms over the past 18 months were able to go find jobs at companies that aren't considered your quote-unquote tech companies, because every company is hiring tech workers right now.
That's a really good point, right? So it wasn't necessarily showing up on the unemployment numbers or the weekly jobless claims numbers, so it's interesting to get into that. Keep in mind, Citi is going through changes. Jane Fraser, the CEO, has talked about consolidating kind of some of their businesses and cutting out layers. So this is why I used the word restructuring earlier. They definitely are going through some changes, but we have definitely also seen, if I take a look at Citi, we've seen that stock trade a little bit higher in today's session, so rallying with some of the other big banks. All right, everybody, we are getting ready to wrap up the trading day and the trading week. Tim and I will come back. We'll go through some of the numbers, and then we've got lots more to come right here on Bloomberg Business Week. We're live on radio, on YouTube, and, of course, on our streaming service. This is Bloomberg.
24 hours a day at Bloomberg.com and the Bloomberg Business app. This is KNEW Oakland, KOSF 103.7 FM, HD2 San Francisco. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television and the Bloomberg Business app. This is a Bloomberg Business Flash.
3:58 on Wall Street. We are less than 2 minutes away from the closing bell at the New York Stock Exchange, and we are on track for a winning week for the S&P 500 index. Right now, the S&P up 0.4% for the week. Heading into the closing bell, we do have the Dow Jones Industrial Average up 28 points. That is a gain of 0.1%. Stocks fell, though. Bonds rose as signs Israel is preparing for a ground invasion of Gaza left traders looking for safety ahead of the weekend. S&P right now down 24. That is a drop of 0.6%. Nasdaq down 173, drop there of 1.3%. But again, the Dow higher on the day, up right now by 17 points, a gain of 0.1%. Big tech sold off with the Nasdaq 100 index now lower by just about 1%. And Boeing shares declined after saying it's investigating quality issues affecting the 737 MAX aircraft. JP Morgan Chase posted another quarter of record net interest income. It also boosted its forecast for the year as the company benefits from higher interest rates and its purchase of First Republic Bank. JP Morgan Chase shares, they are higher on the day, up by 1.4%. Citigroup after earnings down 0.2%. Wells Fargo up today by 3%. And there you have it. Sound of the closing bell at the New York Stock Exchange, and it is on to the weekend with the Dow Jones Industrial Average at the close up 44, up 0.1%. S&P 500 index at the close down 21 points, decline there of 0.5%. Nasdaq Composite Index down 166, That is a drop of 1.2%. So again, on the week, we are looking at a weekly gain. S&P 500 index this week up by 0.45%. 10-year yield 4.60% with a 2-year yielding 5.05%. Cannot ignore the moves today in both gold and crude oil. The precious metal up $59 the ounce to 19.28, a gain there of 3.2%. West Texas Intermediate crude surging 5.7% to 87.67 a barrel. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master along with Tim Stinovic. Charlie Pellet wrapping up the numbers. And Citi, as I mentioned earlier, I just wanted to, I know Charlie was talking about it, it's a little bit lower. I think it was rallying, though, earlier in today's session up as much as 4%. So we saw...
A nice reversal. Well, not nice.
Well, unless you're shorting it.
It's all relative, right, Carol?
Yeah, exactly. It's really good. It's a really good remember. You know, you got to remember that there's two sides to the trade. Speaking of the trade, let's bring in Abigail Doolittle.
Yeah, Abigail Doolittle is a Bloomberg Markets reporter. She joins us live from the Bloomberg Interactive Broker studio. Abigail, what did you have your eye on today? Because I thought we saw quite the reversal in the S&P 500 today, which was pretty interesting to me.
I would agree with you, Tim, and it was the case yesterday, too. So we basically have had 2 days of bearish reversals in a row. The S&P 500 closing down about 0.5%. The NASDAQ closing down more, down 1.25%. The Russell 2000 closing down 0.8%. And then banks, yes, earlier today we had those big banks on those solid reports up more than 2 to 3%. But overall, that bank index down about 0.4% on the day. So another bearish reversal. Yields are lower. The dollar is higher for a second day, though, so I think that is certainly one pressure, although the dollar is off of its highs. I think what stands out the most, though, relative to today is the VIX. That volatility index yesterday, it had a 15 handle. At one point today, it was above 20. Chris Murphy of Susquehanna joined us for Options Insight. He said this was the biggest one-day vol event since the Friday after Thanksgiving back in, I think it was 2021. No, I think it was 2021 on the Omicron scare. And making that even more interesting is the fact that the S&P 500's decline doesn't match it. So it may point to more uncertainty ahead.
That's really interesting. I haven't heard Omicron, by the way, in a few years.
I know.
I just kind of remember what that was, Abigail. Yeah. So what can we expect for next week in terms of technicals here? Yesterday you mentioned that cross with respect to the NASDAQ. Curious what you're watching in terms of technicals for the week ahead.
So, I think that there's going to be more weakness for the S&P 500 and the NASDAQ 100. Clear resistance, selling pressure from above, suggesting that there's going to be another test to the 200-day moving average. The Russell 2000 well below that 200-day moving average. The S&P 500 equal-weighted index, so basically not giving preference to the Magnificent Seven, those big tech names. It is also well below its 200-day moving average. The death cross in the Russell 2000 and that equal weight index probably showing us what could be ahead for large cap. Overall, it speaks to uncertainty. It maybe speaks to the idea that earnings season is going to somehow be disappointing. The Fed, that meeting on November 1st, it's interesting because WRF is not pricing in any kind of hike for that meeting or the following meeting, but swaps are pricing in, I think, a 50% chance of a hike. And then, of course, these tragic, horrific geopolitical situation, the conflict in the Mideast, the unknown around that. On that, we have oil back close to, I'm just searching for it on my screen here, not seeing it, up 5.7%, the best day since March, at $88 a barrel. Technically, oil does appear as though it could quickly go back towards last week's, or maybe it was the week before high, maybe even back above 100. So yeah, a lot of uncertainty present.
That was a pretty long list in terms of what's coming at investors. You know it so well, Abigail, but I do wonder, when we get into an earnings season, or how you're thinking about this earnings season against all of that kind of list of concerns or things that are coming at investors. I mean, typically during an earnings season, do we kind of, as investors, shift our focus, or could it be a little bit different this time around because of the geopolitical, because of, again, the continued kind of uncertainty maybe?
I tend to think that earnings season, if it is a little bit better, a little bit worse, not quite in line, it will it will trump the Fed. I do think, however, though, that the Israel-Hamas war and whether or not it turns into a broader regional conflict, that would trump the earnings season and then put the Fed really back into play in terms of what might come next. I think that the unknown around the conflict in the Middle East could potentially trump everything. Now, typically when you're thinking about something like this, and it's hard for me to just quantify it this way because it is such a tragic and horrific situation, you want to think about whether or not it's going to affect the corporate profit outlook. That is what folks will be thinking about, but even just headline risk in the near term could really create spikes in volatility.
Spell that out for us, how it could actually affect corporate profits.
Well, if it starts to affect the supply chain, and that actually in a one-way, Chevron was asked or forced or told to shut down one of its liquefied natural gas platforms off the coast of Israel. That has had European natural gas up more than 30% over the last week, a huge, huge spike on the idea that supplies could come in light. So if that were to happen for other areas, there are quite a few technology companies based out of Israel. If there are crimps like that, that could certainly, in a smaller way, I would say. But if, I don't want to talk in ifs, but, you're asking the question.
Right.
If it were to escalate to such a degree that there were broader implications that, I'm not going to speak to here, but if there were much broader implications at that point, this is not an apples-to-apples comparison by any means. But again, you're asking the question. When we think back to 9/11, there was a brief recession that November. Now, it was a corporate profit recession, and then it quickly passed, but that's the type of effect that it could have.
None of this is apples to apples, but you're right. There's been a lot of references to 9/11 for different reasons to try and kind of understand this world, whether it's market impact, corporate impact, and obviously in terms of the impact geopolitically and on human lives. But you said it well. Abigail, thank you so much. Have a great weekend. Our Abigail Doolittle, who keeps us honest and up to date when it comes to the market moves. She talked about Israel. We are trying to kind of figure it out, and we continue to talk about it here at Bloomberg. This is what we're so much about, is size and scope in terms of next steps and what it means more broadly in the Middle East. We did have Saudi Arabia pausing diplomacy to normalize ties with Israel after that flare-up in violence between Israeli forces and Hamas, in a major blow to U.S. President Joe Biden's ambitions in the Middle East.
Yeah, let's go to Bloomberg News national security reporter Nick Wadhams for the latest. Nick, good to have you with us this afternoon. What's on your radar as we get into the weekend here?
Well, the big question everybody is asking is when Israel is going to launch a ground attack into Gaza. It feels pretty much inevitable at this point, with Israel telling Gazans to evacuate the northern part of the Gaza Strip. But a question of whether that could come in 24 hours or in a couple of days. We have had some indications that it was going to come very quickly. Now, it looks like maybe not quite as quickly as we thought, but it is certainly coming. And, the big question there is if Israel does go in, what are the risks of a broader regional war? So it's looking very, very serious.
This is so risky, Nick, for so many reasons. One is that there are so many civilians who live in Gaza who ostensibly had nothing to do with what happened last Saturday, and their lives are now at risk. From a political perspective, too, to turn into a global pariah if Israel does kill lots of civilians as a result of an invasion of Gaza.
Well, this is the real tricky thing. I mean, obviously, so much international support from the U.S. and the European Union and others have been on Israel's side, obviously, after seeing these horrific images from the attack by Hamas into Israel over the weekend. And, 1,200 Israelis were killed in that. So, obviously, the U.S. message right now from Secretary of State Blinken, who is in the region, so the Defense Secretary Lloyd Austin, obviously President Biden as well, saying we stand unequivocally with Israel and its right to defend itself, and it should be given the opportunity. It has the imperative there to make sure that attacks like this are neutralized in the future. But the question is, obviously, what happened next? You have had some language from some Israeli officials, such as the President Herzog, saying, if you're a civilian in Gaza, why didn't you rise up? Sort of suggesting that, maybe there might be some sort of civilian complicity, which has, raised some alarm. And then President Biden, just a little while ago, said, listen, we need to, he said, quote, do not lose sight of the fact that the overwhelming majority of Palestinians had nothing to do with Hamas. So you see the administration trying to walk this tightrope between wanting, obviously, to support Israel and its desire to defend itself and eradicate the Hamas threat versus the fears of a real humanitarian catastrophe in the Gaza Strip.
We are talking, of course, with our Nick Wadhams, Bloomberg News, our team. A lot of stuff happening, obviously, in the Middle East, but also in